Hey everyone, I got an exciting interview for you today because I know this is a topic that's near and dear to most of your hearts, and that is, how can I access capital, right? A lot of you have heard my story and heard about different hard money or private money, programs I've used over the years. And as your network grows, more and more people reach out to you. So I actually have Dave Orloff with me today from American Heritage Lending. He reached out and offered some pretty exciting things. So instead of keeping that to myself, I thought I'd do a video and share it with all of you. So how you doing today, Dave?
Doing great, Michael. Thank you for having me, and I'm happy to be here and share the different stuff we're working on.
Yeah, why don't we introduce everybody to American Heritage Lending, sort of, what you are, what you do, who you're backed by, just so they can get a feel for the organization.
Great. So we started as a traditional mortgage lender about 10, 11 years ago. Been through all those ups and downs, and probably started focusing on hard money during that financial crisis as just almost a last resort as all the banks were folding.
Yeah.
Out of that, we just have recently partnered with a large hedge fund out of New York. And the classification of loan programs that they're most interested in buying are those loans associated with real estate investing. So we have short-term loan programs for fix and flip, or, hey, I need to close this in 5 days because I'm getting a tremendous opportunity. All the way on the other end of the spectrum to folks that are looking to buy, no pun intended, one rental at a time, get a long-term loan on that, but have just realized there's no way I qualify, nor do I want to put up with all the paperwork and hassle of going through a traditional bank
Yeah.
type loan program.
Well, that last one is near and dear to my heart because I haven't gotten a bank loan in 10 years probably, except for a couple of commercial stuff I've done refied because they matured, but I've not gotten a residential loan in over 10 years because of just the arduous mountain of paperwork. So I feel that pain. So feeling that need is a good one. Why don't we?
Well, then you could be a testimonial for us.
There you go. There you go. So why don't we talk about fix and flip first? Let's break that
Okay.
down. So because I think a lot of people that watch my stuff have either are or are thinking about doing fix and flip. So let's talk about that program, and then I'll sort of set up some questions and we'll go for there. So talk about the fix and flip program first.
Great. Okay. So basically, this underwrite is based on the collateral and what we think from our handicap or underwrite that deal is going to look like when completed. You brought up a story in an earlier conversation about how you looked at deals and brought in partners and did different stuff. And I would just piggyback for those that weren't on that conversation. We're going to see that hopefully you're buying this asset, this home, condo, whatever it is, below market value. And there's a solid plan in place. It's going to match sort of our feasibility for, hey, these improvements at this cost are going to yield this type of return in the market. And if that all checks out, that is pretty much a loan that we're going to do. Those loans are short-term in nature. They're about 12 months. They're interest-only payments. We can even fund some of the interest reserves. And then the neat aspect of that is recently, I'd say over the last 12 to 24 months, we're not alone. There are some other companies out there, but we're partnering with the rehab costs as well. So that we're helping that investor get started with, a loan to buy the property and then a loan through subsequent draws for them to complete the construction process as well.
So come in, do the purchase, set up 2 or 3 draw structures, for the repair costs. That makes sense. Let's just throw some numbers out. If this doesn't make sense, tell me and I'll adjust them. Let's say I'm buying a house for $100,000. It's after repair value is 200, and the repairs are 40,000, right?
Okay.
So is that so where do you think you would play in that kind of, and it's a 6-month flip, right? Let's just sort of answer all those questions. Where would you play in that kind of deal?
So we would probably be interested, as long as you're buying right and that 100,000 is the right number. We would be able to lend 85% of that, or 85,000.
Okay.
And then we would probably set that up in 2 to 3 draws, exactly as you mentioned, based upon upfront an agreed upon timeline of, hey, let's say the first was at permits. When the permits and all that stuff comes back, you're going to release soft costs and what have you. seconds at framing, whatever that agreed upon schedule
Yep.
is. That's exactly where we would play. And that is, you've kind of answered the question for me. That's our structure.
So just put it, you'll come in for 85 grand. The investor brings 15. Then you're setting up a draw structure for the 40 that we discussed. Call it 3 payments, whatever it is. Whatever you would agree, right? When this gets done, I'll pay you this. When that gets done, I'll pay you that. Right? It's the standard draw structure. And then the investor sells it at 200 grand, and you're paid off. Everybody's happy. That's the kind of deal, right?
That's the kind of deal. And it's funny. Everyone always asks, well, do I have any prepay penalties or anything like that? And no, I mean, it's such a short-term loan. We have no prepay penalties or anything like that.
Yeah, you want the money cycling as fast as possible. That's the name of the game. Gosh darn it.
That's the name of the game.
All right, so that's the fix and flip. I think that makes sense. Where would you not play? I know there's some parts of the country where they're buying 40 and 50K houses to fix and flip for 80. I mean, is that what's too small, I guess, is what I'm asking.
I'm really thankful you brought that up. Making money on an interest spread, it's hard when the loan amount's $40,000 for 6 months. It just doesn't give us enough time to cure our back office costs and expense. Yep. So, we say 100,000. Have we done loans less than 100,000? Yes, but that seems to be kind of our minimum loan amount.
So let me just because you said minimum loan amount. What if an investor found 4 properties at 50K each? Would you do a portfolio loan, or do you or whatever you do individual loans? Would you look at something creative like that? You could say no. Yes. I was just curious.
No, it's a great question. And our more seasoned investors and clients, that's kind of how they look to do these loans, is more in a portfolio or even like a credit line type setup.
Yeah.
It isn't something we like. It's something we accommodate.
Right. So build the relationship first, and then once you sort of earn that respect, you're willing to, have an exception, if you will.
Correct.
Okay. Yep. That's very reasonable. All right. So let's talk about the buy to rent. That program real quick.
So this is a newer one for us. We're really excited about the program, and it basically, I'm piggybacking on a couple things you just said with your own commercial loans. You understand the complete difference between a commercial loan underwrite and a residential loan underwrite. And commercial, it's all about the asset and what that asset cash flows versus the debt service, right? Mm-hmm. So we have basically taken a snapshot of those guidelines, and we've used them for our residential asset class. So we're taking a look and saying, hey, based on a certain amount of equity in the property, if you have a rent agreement at $3,000 a month and your debt service is $2,000 a month, and we can prove a little bit, I don't want to overstate, that you do pay your bills, we love that loan. And that can, and the neat thing about that, Michael, is that can be exactly like you're used to with a bank type loan. So it can be an adjustable, a 5-year fixed, a 7-year fixed, a 15-year fixed, and even the 30-year fixed loan programs available for this category.
Wow. Offering 30-year money.
Offering 30-year money fixed for folks that are looking to just accumulate real estate and rent it out and build their wealth.
That's pretty exciting.
We're excited. I love the loan program myself.
Yeah, and again, sort of same question. You like to do $100,000 loans, or would you go smaller, given you hold that money for longer duration?
Because this is a newer loan program, I'm going to hold my $100,000 minimum.
I just ask
as we figure out our back office.
Yeah, that's fair. Yeah,
just the cost to originate is still
you can't get by that
substantial.
It's I couldn't only imagine. All right, so let's. The next one I have on my list here is refinance. Why don't we talk about that?
So we're using 2 forms for refinance. We can use for the listeners here on the podcast. If there is a hardship or anything, you can use some of the short-term money to get through a bridge, as we call it.
Okay.
But I was speaking specifically to the refinance available for folks that have a lot of money tied up in rental property through this last, decade of appreciation, that are saying, gosh, I want to get back. I want to get active. I want to add to my portfolio. But they've always been locked out for whatever reason. The regulations from Fannie of you can't have more than 10 properties financed, or
Yep.
We could go on and on with that. Or I don't want to deal with all your paperwork.
Yep.
We're using this loan I just mentioned for the buy and rent to refi people and cash out of the equity that they've accumulated to go whatever they want to do. But most of that is to buy the property.
Yeah. So this is, hopefully people who were like me and active during the crash or whatever you want to call it, downturn, realize what's in front of them now, right? Lending was impossible for guys like us from like 08 to 14, probably. So just nearly impossible. And it wasn't easy after that. What I think, what Dave's sharing with us here is, now instead of, just not doing it because you didn't think you could, because I've tried to refi stuff, I don't know, 5 or 6 different times from people telling me they could. Yeah, of course we can. And, 3,000 questions later, I got annoyed and just stopped returning their phone calls. But it sounds like you've gotten by that. So that's hopefully people see that. I think some people should be refining now, pulling out equity because you never know what's coming. So, nice to be liquid. So I think that's an exciting program for people.
I totally agree.
Yeah. Then the last one you hear is a bridge loan, I guess. Why don't you talk about that?
Yeah, we've sort of covered that. It's an overarching term for what I'd call a real quick acquisition need. Hey, I found this property. It just came on the market. I'm competing with all cash. Will you come alongside us and help us, get this property and close real quick? We use it in that use case. And then we do, from time to time, people get stuck. They're in a property that they thought they were going to flip, but it's taking longer. Stuff happens, right? And we've used the bridge loan to kind of, I guess, just lengthen the runway for people on getting through a transitionary period while they're investing in real estate, either long-term, short-term, fix and flip, whatever it is.
Yeah. So I think what you've really laid out for people listening to this is, if you're a real estate investor, who has a property, again, we're going to stay around the 100K level. So there's some swaths of the country that won't be able to play until they build that relationship. You have a partner, it sounds like, that's ready to partner with you with American Heritage Lending. They've got the right program for you. If you're buying for cash and you're going to fix and flip sub a year, you got the program. You've had assets for a while and you want to pull cash out, they have a program for you. So I would tell you to look them up. Obviously do your own due diligence. But I think this is somebody that real estate investors should look at going forward. So I want to make sure, Dave, I turn it over to you to tell everybody how to get a hold of you and all of that good stuff.
So thank you very much. Shameless plug here, but you can reach me. Probably the website's easiest. It's just ahlend.com. So my email is dave@ahlend.com, and would love to help. If I can look at a scenario and even give you a quick no, sometimes that's a lot better than stringing you along and asking me. I loved yours 3,000 questions of get me this, get me that, tell me about this, tell me about that. So
yeah, I think looking them up, right? Dave@ahlend.com is the right idea. Bring him a scenario. He's promised a quick no, which is better than maybe. I hate maybe. Yes or no is what I want. Yes is the best, and no is only slightly worse. So with that, Dave, I want to thank you for joining this. And hopefully lots of people give you a call and they can do some business with you.
It's been my pleasure, Michael. Thank you for having me.
You got it.